Hey there, Facebook and YouTube. Dave Huber here for Tradeway, and it is time for live trading. We're going to look at the market real quick. We got about 20 minutes together, so let's get right into it. If you're with me today, drop a comment in the comments section. Let me know you're listening. Hey, Ben, I see that you're on here. Are we still in a bear market? Lisa, let's talk about that for a minute. So I'm going to share my screen so you guys can see some of the headlines that we're seeing in the market are very bearish type headlines. We see that the market has dropped 41 points today. The futures were way down this morning, and now we see that the stocks are tumbling. Why are they tumbling? Well, the entire story behind the stock market right now is interest rates. Are they going to raise them? When they raise them, it spells bad news for stocks. Why? Because raising interest rates means that borrowing money costs more to do. And so that's tough for businesses. And that means that business cash flow is going to be reduced. That causes businesses to spend less money. You see them start doing things like laying off employees, things of that nature. So, rising of the interest rates, which is what we have to do to fight inflation, means that we're probably going to see the market crash. Now, we just finished pausing interest rates. There were no interest rate hikes in June, even though most of the Fed members, they said that we should raise them in June. They decided not to. They decided to hold off. There was a pause. Now, if you look at history, the pause in history was Paul Volcker. Right after Jimmy Carter and his era, we saw a pause in the raising of the interest rates to fight inflation. When that happened, it really just made things worse. It caused inflation to scream up out of control again. Then they had to get more aggressive with their interest rate hikes, and that caused us to have like a double dip recession. Now, what are we looking at on the market as a whole? Let's take a look at the chart. You'll see that we were in a pretty healthy downtrend for most of last year. And this year, we broke that downtrend and started into a new uptrend. Are we in a bear market? From a technical standpoint, no. But I wouldn't treat this like a bull just yet, Lisa. Why? Because there's still a lot of bad in the market. Interest rates still need to be raised because inflation is still out of control. You go, is it out of control or is it coming down? Well, it's not as out of control as it was. So if you want to call that coming down, sure. But we're still well beyond the 2% interest or inflation rate that the Fed wants as its target. We're double that. We're at 4%. So in order for them to hit their target, 1 to 2% inflation is usually considered a pretty healthy place to be. If we're beyond that, it's not so healthy. The Fed's job is to try to keep the market healthy. And so they're going to try and bring it down to 2% inflation. How do they do it? They raise the interest rates. Where do they raise them? In the bond market. That means the cost of borrowing money is going to go up. It strengthens the dollar. You'll see that gold and silver don't like that. They don't like that too much. Gold and silver goes down as the strength of the dollar goes up. And right now, gold and silver is like kind of at a peak and getting ready to go down. I'm very bearish on gold and silver, partly because of my brother-in-law who researches that stuff every single day. He's kind of kept us apprised on what's going on in the precious metals market. And he says, very bearish right now, very bearish on, on precious metals. And so why is that? Because they're talking about raising interest rates. We had the pause in June. Looks like we're going to have interest rate hikes, at least one more, probably two more this year, and maybe as early as this month. So that is why you're seeing the market kind of get a little bit bearish today, is that they're contemplating pricing in an interest rate hike this month and perhaps again next month. But could that just be short-lived? Yes. But then something big happens in October. What happens in October? Well, in October, that's when a lot of the mortgage rates are going to reset. In other words, you're going to see a lot of the raising of the interest rates that we have. We're going to see that hit the market. So in other words, we've been raising interest rates, but people aren't feeling it yet. And in October, that's when you're going to see some of that happen. You're going to see some of the interest rates really hit. So if you've been hearing in the news something about October is coming, right? That is kind of the point at which we believe a lot of what we've been doing to fight inflation is really going to be felt in the market. And so are we still in a bear? Long term, yes, Lisa, we are still in a bear long term. Are we in it currently right now from a technical standpoint? No, we're pretty bullish. Very short term bullish, though. Very short term bullish. So let's take a look at the support and resistance lines here. I don't have them drawn in exactly where I want them yet. Right here's support. Resistance I'd put up a little higher, maybe right in here. You notice how we had a little bit of an anomaly up here where it liked to bounce around above resistance, came back down, tried it again. Then we get an offsetting anomaly down here. For those of you who don't know what I'm saying, when I talk about anomalies, come take a step one, start your journey class. Will teach you all about this kind of stuff. But basically it means it's a fluke. Excuse me. It means it's a fluke when it gets up above and down below in here, and its true trading range is right around in this area, which means we do have a little bit more where we could move up. There's some speculation that we may see this market reach as high as 46 this year. It could happen. It could happen. But if we keep looking forward to interest rate hikes, it might not happen. And we may see this come on down, but we're sitting right up against a 10-day moving average. What does that mean? Well, let me zoom in here. There are these little squiggle lines that the computer draws. For those of you who are brand new, squiggle lines here, these are called exponential moving averages. These dotted ones down here are simple moving averages. And essentially what we're doing with these moving averages is measuring the health of a trend. And right now we got a pretty healthy new uptrend. Doesn't mean it's going to last, though, because all those interest rate hikes are going to really take effect in October. We may see a little bit more of a move up leading into that. We have a little bit of a cup and handle type action going on here, which is kind of bullish. So we have a little bit of a bullish pattern on the overall market. This is the S&P 500 we're looking at. And it's not a true cup and handle. A true cup and handle usually takes a little bit longer than this, and we have some muted volume at the bottom of it. This looks a lot like a cup and handle, but it's a lot shorter term. So while we have the same kind of action, at the same time, it could easily be an M pattern because we've got a little double top going on here where it just kind of double taps this high and starts trying to come down. If this breaks down below the middle of, let's say, the low from June 26th, if it goes below, what is that price point? The low is 43.28, 43.2808. If it goes below 43.28 and we see that happen on higher volume, there is a good chance that we'll have ourselves a very bearish pattern, and this could break down and kind of go down for a while. Longer term, if you kind of zoom out, it's entirely possible that we get right back down into this trading range in here. But, I mean, we're well extended beyond that, so it may not happen very soon. We could see this thing limp along and try to do a little bit of sideways motion like we saw pretty much all of April and May. Sideways motion here. We may get more of that up until August, September, right? And then if it tries one more run up, it could hit what a lot of analysts think. It could hit that 4,600 price point, and that's if it tries to move up. But all of this move here, all of this uptrending move in here is very much like an exhaustion move, meaning it's like this one last desperate attempt for the market to try and rally before it really does have a true shaking out of all the bears and bulls and everybody. He's like, the whole thing's going to crash. But we let the market tell us when it's going to do that. And we don't know yet when that's going to happen. So that's kind of an overview on the market. We're bullish short term, but long term, we're more bearish. So let's take a look at some stocks in here. Some of you guys are sharing some stocks. Ben, wow, you got a few of them to look at. Let's just take these one at a time here. We'll do ADP. Okay, ADP. We've got a very nice horizontal pattern here. This is a roll for sure. Look at that roll. And because it's in a roll, you can identify that it's pretty much right at resistance. Could come back down pretty soon. It could within the next couple of days, especially if we get a little bit more of a pullback in the market. You may see this move on down here. Maybe not quite that low. Maybe pull that up just a tad. That's a good support line right there. Resistance, maybe come down just a tad with it. No, I like it better up, right up here. So that picks up some of these old bottoms in here. Kind of let the lines prove themselves to us here. But right here, we got move down off resistance, move down off resistance, move down off resistance, and you're almost to resistance again. So you may see this thing move down in the near future if we get some bearish market tone, which now that we're talking about possible interest rate hikes in July, you may get some short-term bearish market tone. So that's ADP. Let's look at GE. So GE, very much an uptrend. Let me draw some lines on it here. You can pretty much just follow that 20-day moving average. It looks like it likes to bounce that 20-day moving average quite a bit. We'll go like this. Come in with a parallel line. Bump that up in here. This one may be watching in case you get the bullish market tone, right? So the last one I'd be pretty bearish on. This one could be somewhat bullish. I'd be waiting on it though. It's getting a little messy right in here. It may be finally failing this pattern. If it does, you may get a little kiss goodbye action. So it could end up being bearish. One thing we know for sure, it is a late stage base. And if you don't know what bases are or a late stage base is, for those of you who've not taken our courses, come take a step one, start your journey course. And then check out the Base Breaks home study course that we provide. Some of y'all have access to that if you're one of our classic elite or master traders, or if you're a top gun, there's a good chance you have access to Base Breaks. And if you have Base Breaks, it talks about these late stage bases where this pattern is just doing the same thing over and over and over again. And once it gets to about 4, 5 bases, where it's 1 base, 2 base, 3 base, 4 base, 5 base, 6 base. I mean, it's very late. And a late stage base often requires a little bit of a reset. And so when that happens, you'll see this kind of move up to support. It might bounce down off of it. We'll get a little bit of a correction. And once it corrects, it kind of resets and it has a chance to go up higher after that. So very bullish pattern leading into this, but the bullish pattern seems to be breaking down. So I'm actually somewhat bearish on this one as well. Let's pause on yours there, Ben, because we got Aiden has a question about Hassan and we don't want to run out of time before we get to him. So I'll come back to some of those other ones. Hassan or Aiden has a question about Hassan. So ASAN. Aiden, did you play some pickleball? I hope you did. Hope you had the chance to play a little pickleball during July, 4th of July. Let's take a look at this. We're gonna zoom out a little bit here, and we're gonna go with a array here. We're gonna go really long term. Look at this really long term first, and then we're gonna zoom in and see what we have. So draw some support resistance lines in here. Oh man, yeah, those fit really nicely there. Now let's zoom in a little bit, see what we have. Yeah, that's not bad. So indeed you did. It is very hot out there to play pickleball, but you did it anyway. You are diehard. I played some basketball last night and I got smoked, but it was good to play. It's been a couple of weeks since I really played well and kind of getting over being sick and stuff. So I'll get back to it. I'll get where I'm playing well again. But okay, there you go, Aiden. You got a little bit of a down motion here. Back is feeling better. Yes, Aiden. I risked it last night, but man, I'm glad I did because it is feeling way better. So it's moving up, moving down, moving up. We're currently in the down. So there's some room for ASAN to move down as well. All right, John, let's take a look at Randall. And to answer your question there, Aiden, is it a Head and Shoulders? It's very much like a Head and Shoulders type pattern right here. Great observation. It's been moving up. Head and Shoulders coming out of an uptrend is very bearish, and you've got to move down on what could end up being, it's probably going to end up being higher volume. So that's the trigger point right there on Head and Shoulders. It's very likely to move on down from here. Will it only move to this? Maybe. If so, that's only about a $3 move, but that's more than 10%. Not bad. So good job identifying that Head and Shoulders there, Aiden. Let's take a look at NVIDIA, John. Let's see here. NVDA. So yeah, well, we've got this gap up, huge gap up off of earnings, and something we call a post analyst signal, where there's a chance this thing stays up above that gap line for 7 to 21 business days. We're well past the 7. Are we at the 21? Let's take a look. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27. So we've been up around that for quite some time, which that there's a couple of things that we look into to really determine if it's going to stay above that line for 7 to 21 business days. That's one of the things. Sure enough, it does, and that 21 business days is up. So, it could get bearish from here, but man, it has been hot, hasn't it? Ever since it's gap up. What's driving it? AI. Like NVIDIA is one of those big stocks that's in the news about artificial intelligence, and everybody's crazy about artificial intelligence. In fact, the rally that we are experiencing is primarily driven by stocks that are dabbling in AI. It's all about the AI stocks right now. Now, the thing is about that is that while in a new bull market, you want to see something new, some new driving factors, AI definitely could fit that bill. We still have a lot of employment problems, right? Like we've got the market is still too hot. It has never truly cooled down. So we need one good final shakeout of the market before we can declare a new long-term bull. But we definitely have a lot of the pieces there, right? We have a lot of the pieces. AI is definitely one of those pieces. But what's going to happen is eventually someone's going to become king, and you're going to have 2 or 3 like main AI stocks. Everybody else is going to just kind of get absorbed or go away. And so while there's lots of stocks right now that are driving the market that are AI related stocks, they won't all be there forever. So late in its run, definitely, John, definitely late in its run, especially because of the fact that it's reached past 21 days after this gap. Late stage base for sure. Like this thing needs a reset. It really does. It could come down here and start to roll, which may be why we're seeing a little bit of downward pressure up around the 430 range. It needs a little bit of a reset. It could end up trying to come down and fill that gap. If that happens, man, that'll be a big move down. I don't foresee that happening like right away, unless the market really gets bearish on these future interest rate hikes. So that could be something that we see in the near future, John. Definitely late in its run. But watch it, like if the market decides to make a new leg up, NVIDIA is one of those stocks that's driving it. So it could continue up, but I really do think it needs a little bit of a reset. Okay, so let's go back to some of Ben's here. We're almost out of time. Ben, let's look at Ford. Ford. Okay, so wow, Ford has made quite the climb all of a sudden. And I'm just going to draw some horizontal lines in here. Look at that. There's one. It's currently above a key horizontal line. So you may see it try to make another leg up if the market continues bullish. But like I said, be very leery of the interest rate hike talks, because now everybody's going, yikes, we need more interest rate hikes. All the Federal Reserve members are saying it. Why they paused in June it's not compelling evidence. It's like, okay, it seems to be working, so let's stop. I don't know. That's what Paul Volcker did back in the late 70s, early 80s, and it didn't bode well for us. So did we learn from history? I don't think so, but we'll see. Anyway, but right now, this could pull back to the 10-day moving average. If it's going to make a move up, it's going to at least do that first. It's almost there. And if it pulls back to the 10-day and the market decides to stay bullish, then you might get another move up. And this horizontal price point could really act as support. So that could be pretty good. John, you're welcome there. Let's take a look at Starbucks, SBUX, further short run. Let's take a look. And this may be our last one because we're already past 20 minutes. Oh, wow. Starbucks, further short run. Yeah, I really like that. Especially after today, you're probably going to see this volume spike above yesterday's volume. I'd be surprised if it doesn't because it's already more than halfway there. And this is just kind of like I think I currently have it at like 10 or 15 minutes delayed. So like this could actually be higher than it is. That's a very bearish looking pattern there. The fact that it broke down out of support. If you haven't already entered a down trade in that, maybe get prepared for one, especially if the market decides to keep going down on the interest rate hike talks. If it does, I doubt you're going to miss a good buy point. Like this thing, unless it really screams down for the rest of the day, which it could, because it's moved down so hard so fast today. Let's take a look at it just on the minute chart here. See how that's gone down and it's kind of moved up slightly. Like this could pull back up kind of midday. I might consider seeing this thing kind of move up, maybe even as high as 96.60. You might see a little bit of a move up, especially if the market tries to rally at the end of the day. If it does, then tomorrow you may have a great buy point for a down trade, a put, if the market decides to continue its bearish sentiment right now on possible rate hikes. So there you go, guys. I got to most of yours there, Ben, but you had so many of them for me there. Come check us out on the live trading hour, which we do from 2 to 3 p.m. We do that Monday, Tuesday, Wednesday, Thursday. So I don't think we're doing them on Friday, but you got 4 days a week, which means, Ben, you'll have another opportunity to check out the live trading hour, share those later this afternoon with Jared, see what he says. I believe Jared's going to be of the same opinion. Short-term bullish, long-term bearish. So that kind of wraps it up now for our live trading here on YouTube and Facebook. Hope you guys enjoyed it. Thanks for asking about some of these stocks. And hopefully this was helpful for you guys. Really enjoy having you guys on here. Can't wait to see you again next week for live trading hour. I don't know if, or live trading 20 minutes for YouTube and Facebook. Don't know if I'll be doing it yet or not, but if so, someone will be. If not, someone will be. So we'll see you again next week, and then we'll see you guys in the market. Take care and have a fantastic afternoon.